TGIF Warriors coach here at TradeGATEHub.com, and we're sponsored by TradeView. So what a week. The dollar really had no advantage with the Fed pause, which I was expecting, and the market really bought into the ECB statement about hiking rates in the midst of an upcoming recession. We'll see if they follow through. But we have to be disciplined about price. And, you know, I was looking to buy this break, and I did buy this break. Just a quick recap of the week, actually. You know, I was able to catch this day. I'm glad I made it a day trade. And I had stayed long euro, but got out at 8:30 and then tried it at 8.5. I'm gone. So we have to open up our minds to, is this a big change? And the thing that has me a little skeptical is it's done on news with the Fed standing pat and the ECB tightening. So the narrative is the interest rate differential, but that isn't the only thing that moves currency markets. Events, risk-off events that could come into play. So I'm not ready to step back into the short side of the euro. I need to see some more evidence, but I do have to be open to, if this breakdown follows through in the euro, that we could possibly see 112. Okay, 110 is going to be tough, but that would almost make it like a 1, 2, 3 up here at 112, give us a marginal new Dixie low, maybe under par, what I was looking for a few months ago, if that's a scenario. And then when you look at cable, which really never gave up anything, so this still could be a retracement move. I'm not ruling it out, but my preferred short now is Aussie, because Aussie right here is at 68.81, is 61.8 back of this recent decline that we've had from here to here. So it was it was the first one out of the hole before the euro started getting stronger. Aussie was showing leadership, and perhaps this is going to be the leadership. Also, even if Aussie is still good, it's pretty stretched from rally of 4.5. So we've had 450 pip rally. Why not a pullback to 67, 66.5? So I'm short, attempting shorts here in the Aussie, carrying it over the weekend into next week. We'll see what happens and what kind of follow through we get in euro and the dollar. Surprisingly enough, with the weak dollar, the yen is still pumping. I talked about us breaking out of this triangle, so long yen positions worked out. I still think there's a shot for about 143. So I'm expecting some more follow through into next week. BOJ, no change in policy. We had a nice little reversal in gold that you have to respect, at least for now. This is really an important line of in the sand. I've been talking about this breakout line being tested. Yesterday was the day it turned on the test. We start trading under 1920. You're opening the door to much lower levels, where you could even see 1800, maybe 1780 again. So this is really the chance for gold to shine, excuse the metaphor, and we need closes back over 2000 to confirm that's going to happen. I think initially that it's going to be rejected up around 1985 is going to be a tough level. Silver dragged along yesterday. We had both gold and silver in the Asian session well before the U.S. Open, sharply lower. Look at the wick that was left there in silver. Silver still, closed a few cents lower after being 40 lower, but gold was really the strong performer. Not much follow through today in the gold. So the reason I can't get excited about the metals is the gold shares. So, after yesterday's big day in gold, we really didn't have much happening here in the little bit of a hold here, higher low. Could go, if gold goes to 1985, GDX could recover to 33, but then I still think there's one more wave down. Then that's why I'm not really getting excited about the gold at this time or have FOMO working on me. Let's move to parabolic moves in the market continuing today. NASDAQ sharply higher. You have the S&Ps making new highs now. You know, this kind of action reminds me of what Mike says, that the biggest moves are always made near the end of the move. And one thing we learned this week was this 43.40 level, which is already 100 pips away, is going to be an important level. So this was our last throwover. I was talking about throwovers in NASDAQ, which happened way back here. I have to go to a daily to show you how much follow through we've had on this throwover. Some confluence down here, which implies that when we peak, we could get a pretty good sell-off. That would be about 1,500 points just back to the throwover line. Same situation, throwover in Apple happening. The only difference is when you look at Apple, the 4-hour is still diverging, as well as other time frames under 70 or right at 70. And you compare it to the 4-hour RSI structure, the S&Ps are back at 80 and NASDAQ's back at 80. Though for some reason, the relative strength in Apple is lagging the overall market. So that's one way I could rationalize still holding my put positions in Apple. We all do that, don't we? Find reasons to rationalize their position. The other thing I talked about, and you know, maybe we have a little bit more time, but interest rates really haven't moved that much lower on a weekly basis. We still need the 10-year to take out 360. It's still in this descending triangle. Here's your descending triangle. Just take a look at, it's a better look. Breakout coming in over 390, failure under 330. Your first tip that the downside is going to be, the trade would be back under 360, a very important pivot. We start breaking out over 390, whatever the Fed's saying, the market's going to keep tightening for them, and we'll see new highs in yield. So those are your two levels in the 10-year. 360, 390 is your bracket for the next major move in these markets. TLT is trying a little higher on the week. You know, no flight to quality. It was always my assumption that if we had a big bond rally, it was going to be due to risk off, which is almost, you know, sacrilegious to talk about risk off in these markets. So we'll see what happens into next week. There are some harmonic patterns that had this level called at 44.40. This certainly surprised me. I was thinking 43.40 when we're down here. So definitely surprised me. Kind of reminds me of a little bit of a mania going on. Not that we're at new all-time highs, but that, you know, 10% correction could happen at any time. The biggest mania that we have going now on the globe is in the Nikkei, and Nikkei looks like it had another decent day, another powerful day. That's becoming parabolic as well. Look at this. Okay, look at all the gaps. So I don't know how long this rubber band's going to stretch. I'd be careful with Nikkei. So the most dramatic part of the move, Mike Venezia. And you know what, guys, if you didn't have a good week in the market, you really need to come into TradeGATEHub.com and follow Mike's strategies and what Twitter accounts that he's curated give him market tells, like option sweeps, when he sees the big swings in options and there's enough time. You know, I'm pretty good, but I've really never witnessed a guy that has the ability to master so many different positions and always be looking for new stuff, and does not do this automatically. It's done discretionary. It's not on a program. He's the program, And if you're a stock trader, you know, it's your loss if you're not coming in and listening to Mike Venezia. I've been, you know, talking and sharing ideas with Mike for a few years now, and he amazes me. And you guys know, I've seen quite a few traders in my career. I've mentored them in prop rooms and trading communities. Really something. Really glad I met Mike. He has skills. So everyone have a great weekend. We'll see. I'm going to take the Aussie short home, see how that works out. Remember, the difference between pros and amateurs is knowing how to lose. So you have money left to be right with. And don't just count your pips, count your blessings. Be back with you next week. I have a great special guest. Peter from MCM is going to be with us. Seen Peter call lots of turns in the S&Ps. We'll see what he has to say next Thursday. Adios.